So I actually make more money by a long way in bear markets. So bear markets for macro people tend to be very interesting. So if you think about a bull market, they tend to be long, and let's say they go up 10% a year,
Okay,
or 15% a year, something like that. That takes a long time. Bear markets, you probably get a 50% return in a 6-month period.
yeah,
So with the ability to use futures or options, particularly options, you can take hugely leveraged bets in a very fast moving market where the markets have underpriced this risk. So that is where, when you're looking at the indicators, particularly around recessions, it's hard around geopolitical events and stuff because they tend to be more randomized, but recessions tend to be forecastable. And around that, you can start positioning yourself. So we're starting to see it happening in the US right now. We're starting to see the yield curve turning lower.
yep,
Usually when the yield curve goes negative, a recession follows soon after. So then you're looking for business cycle indicators like the ISM survey or PMI surveys or sentiment surveys to start rolling over and going below 50, it is in the ISM, which tells you the economy started to potentially contract. Those kind of signals, and then a bit of technical analysis, will give you the timing. Now, there's no 100%, there's no certainties in this world. All we do as investors is look for putting probabilities in our favor.
okay,
And the more experience you have doing that, the better you get at it. And the pandemic was one of those very obvious setups for us in the macro world. The economies globally were already slowing down. We'd had the trade tariff wars with China and the US. Trade was slowing down. Then the pandemic arrives. You saw the outcome in China, which was lock everything down. It went to Italy. Italy did the same. The moment that happened, you knew the whole world was going to follow suit and close their economies. And that looked like, okay, this is a macroeconomic event that we can not only hedge ourselves from, but actually profit from.
So what's the ballpark percentage of success in predicting the bear market?
So there is a secret here. There are two types of drawdowns that you get. You get corrections and you get economic bear markets.
Okay.
Right now, across the world, we've been seeing markets sell off. Well, if we go back to my framework, the ISM is still positive. Global growth is still positive. Yes, it's rolling over. Yes, the yield curve's coming, but none of the economic signals are there.
Okay.
So really, you have to be quite lucky to capture those events.
Yeah.
And I would say I probably get, it's a very 50-50 hit rate, maybe less.
Okay.
% of those kind of corrections you can spot. They tend to be technical analysis, but you often have many false starts, and then finally it happens, and they're not great. If you get the other one, which is all the economic signals stack up, then I have 100% hit rate.
Sure.
No, that's 100% would be fair. I'm always early. So give me, maybe get stopped out once, give it a go once, maybe even a second time, but the third time you make all the returns. So you might, lose 2%, lose 3%, make 30, 40%. It's thinking of the risk returns, but just picking market corrections, unless you're a really good trader, I tend to be slightly longer term. I tend to be 6 months to 2 years is my time horizon. Our ego wants us to pick all of these because it makes you feel right. Bears always sound smarter, and I've been a bear, a lot of the time. But realistically, you're better off to buy the dips than to sell the rallies. And India is a market where I have waited for a full structural bear market for 15 years. It just doesn't happen.
Yeah.
Because of the demographics and flow of funds in India and international interest in India, you just never get that opportunity that you're really looking for, because before you know it, the flow of funds comes back in. It's a very young population. People are investing there for their retirement. So yeah, it's hard. I would never pick tops in India. That's a dangerous game. I'd pick bottoms. Every time you get a sell-off, that's the opportunity.